Next, microeconomics decision makers, and within this we have 8 subject areas: money and banking, households, workers, trade unions, firms and production, firms' cost, revenues and objectives, and market structure. So first let's start money and banking. The forms of money, we'll discuss the functions and characteristics of money, we'll discuss the role and importance of central banks and commercial banks for government, producers, and consumers. So what is money? How can we define money? Money simply is a current medium of exchange in the form of coins and banknotes. It's a medium of exchange in the form of coins and banknotes. So what are the forms of money? There are many forms of money. Following are the main forms of money: metallic money, paper money, bank money, plastic money, near money. So what are these actually are? Metallic money, the money made of any metal such as gold, silver, etc., is called metallic money. It exists in the form of coins. You would have seen, of course. Paper money, this is the usual currency you use. Paper money refers to notes of different values made of paper, sometimes mixed with plastic so as to make it more durable. So paper money refers to notes of different value made of paper which are issued by the central bank or the government of the country. Bank money. Bank money is the most modern form of money. This money is also called credit. We'll discuss later in our studies. It also consists of checks, bills of exchange, drafts you will study in your later courses. Plastic money. Plastic money means the credit cards, smart cards. Plastic cards which have specially printed set of characters with your name written on it. And recently the use of this money has significantly increased over the period. Last is the near money. So a type of money, near money, is something that is close to money. So near money, you can say a type of money which can easily be converted into cash or money. It includes deposits, you can convert into cash. Bank bonds, you can convert them into cash. Government bonds, you can convert them into cash. So near money means some instruments, deposits, bonds which can readily be converted into money. Now next, functions of money. Money performs 4 different functions. First, it's a medium of exchange. We use money to exchange goods and services. If you buy a good, you pay money for it. If you buy a service, you pay money for it. So you use money as a medium of exchanging goods and services. I provide you service, you pay me money. I use that money to buy goods. So money is a medium of exchange. We use money to exchange goods and services. Money is a measure of value. You can measure the worth of an item by its monetary value, by its dollar or rupees amount. For example, iPhone latest mobile, if it costs $1,200, it means expensive. And a similar mobile, a Chinese version, might cost you $300. Now this number itself tells you that the iPhone is much more valuable. Why? Because we have assigned more dollar amount on this. Whereas a Chinese version, a Chinese mobile, Huawei, etc., it's worth $300 only. So it's a measure of value. iPhone is more valuable because it's for $1,200. A Chinese mobile is less valuable because it is for $300. So money is a measure of value. Right, then store of value. Money is also a store of value because you can save money now for future consumption. So money can be used as a store of value. You can keep it safe, you can store it, deposit, keep it safe somewhere, and you can later use it for the future consumption. So it's a store of value as well. The 4th function of money is the means of deferred payment. What does it mean? That you can enjoy the benefit of a good or a service now, and you can pay the money later. You can delay the payment. You can consume goods. You can get service now, and for the payment, you may make the payment in the future. You can delay the payment and you can make the payment in the form of money in the future. So money is also a means of deferred payment. You can delay the payment after consuming goods and services. Next, we have the characteristics of good money. What are the characteristics, the qualities of good money? A good money is the one that is easily acceptable. It is easily accepted by producers, sellers. A good money is the one that is easily acceptable. The second characteristics of good money is durability, means it should last long. If you have seen Hong Kong dollar, you would notice that Hong Kong dollar is quite made up of quite tough material. It's not just paper only. It's a mixture of paper and plastic. Quite, difficult to tear up. So it must be durable. It should last long. It's not just a single wash can destroy the currency note. So it has to be durable. So current exchange rate of Hong Kong dollar is around 19.9 PKR. It's quite a durable currency, Hong Kong dollar. So durability is one of the characteristics of good money, that money should last long. Portability. It should be easy to carry. You don't have to carry big sacks and bags to carry money. It should be portable. It should be easy to take from one place to another, maybe just in your pockets. Now, I believe 1 million rupees can easily be carried in your pockets, because they are more in denomination, smaller in size, so it has become easy to carry from one place to another. So portability means they can be carried from one place to another. Divisibility means that there should be different denominations or the breakups of currency. For example, like in Pakistan, we have a 10 rupees note, we have 20 rupees note, we have a 50 rupees note as well, 100, and then 500, we have got 1000, and we have got 5000. So we can divide a 5000 currency note into 5000 currency notes, or we can split 1000 currency note into two 500 currency notes, and we can split into a smaller denomination. This is called divisibility. We can divide a larger denomination into smaller one. And the last feature is scarcity. Money would be valuable only if it is limited in supply. If everyone has got tons of cash, it will lose its worth. So the characteristic of a good money is that it has to be limited. It has to be short in supply. Like pebbles on a beach, they are countless, and that's why they are worthless. So currency shouldn't be like that. It should be scarce. It should be limited in supply. Only then it will have value. Okay, it makes sense. Now, moving on. Central banks and its role. What's a central bank? Central bank is an independent national authority that conducts monetary policy, government's policy of interest rates and money supply. It's a bank that regulates other banks. It's a massive, huge bank backed by the government who regulates other banks. It provides financial services including economic research. The goal of the central bank is to stabilize the national currency, keep unemployment low, and prevent inflation. So central bank is the government bank responsible for monetary policy, conducts economic research, helps government stabilize the national currency, keep unemployment low, and prevent inflation. We will discuss these in our later studies. So let us discuss its roles first. We have discussed what's the central bank. Roles of central bank include the rights to issue currency notes. Central bank issue currency notes. In Pakistan, the different denominations currency note I just discussed a little while earlier, they're issued by the central bank. It is bank of bankers. It's the bank of the government. Banks deposit their reserves with the central bank. Government keeps its cash with the central bank. It manages countries' gold and foreign exchange reserves. This is the job of the central bank, keeping countries' gold reserves as well as forex reserves. It manages national debt. Currently, our national debt is over $100 billion. Over $100 billion, gentlemen. It's a huge amount of money, above $100 billion. So this is the job of the central bank, to manage the national debt, the repayments of interest, repayments of principal, and collection of additional debts. This is the job of the central bank. And finally, the second last point is, it regulates and supervises banking system. There are many banks in Pakistan, elsewhere, every country has many commercial banks. So we need to regulate those banks. Otherwise, if we just let them operate on their own, they might be involved in some unethical, unscrupulous activities. So it is important to regulate them. So it's the job of the central bank to regulate and supervise the banking system, keep them in check, control them. And finally, the last point, the role of the central bank, it sets the official interest rates in the economy. It's called the base rate or the policy rate. And then next we have commercial banks for producers, consumers, and government. Commercial banks. So commercial bank basically is a financial institution which performs the function of accepting deposit from general public like you and me, giving loans for investments with the aim of earning profit. It also offers locker services, financial advisory, etc. So commercial banks are for general public, for businesses. So what are the functions that a commercial bank performs for producers, consumers, and government? I've just summed it up in a tabulated form. For producers, it deposits money, it receives payments on behalf of producers, it lends commercial loan to producers, it helps producers buy and sell shares. This is called a brokerage service. It buys and sells shares on behalf of its account holders. It maintains a pension fund. This is retirement plans for the employees. Some companies take the services of a banking institution to manage their pension funds, retirement benefits. And it also helps in financial and tax planning for its clients. And also it provides the valuable locker services where a firm can keep its bonds, certificates, share certificates, and valuable contracts, property documents. This is also the service a commercial bank offers to producers. For consumers like you and me, we can deposit our savings, we can receive our payments into the bank, which we can draw later. We can take personal loans for our personal use. We can also take the services of banks for buying and selling shares in other companies on our behalf. In other words, bank can perform as a broker, and then we can also use the services of security, custodial services, bank lockers. We can keep our valuables, gold, etc., jewelry with the lockers with the bank. And for the government, commercial bank helps government collections for tax revenues and other government levies, and it also lends money to the government, to the public sector. If government need money, government can borrow from the banking sector also. So now let's try a few questions to reinforce our understanding. A commercial bank is appointed to act as a country's central bank. A commercial bank is appointed to act as a country's central bank. What new functions would it now have? Holding liquid assets. This is done by every commercial bank. We are specifically looking for something that is done by a central bank. Holding liquid assets, it is done by every commercial bank. Liquid assets is an essential requirement. Ensuring security for loans. When you borrow money from the bank, you have to provide a security. So this is a feature of any commercial bank. We are looking for a feature of a central bank. Function of a central bank. Dealing in foreign exchange. Almost every bank deals in foreign exchange. Yes, controlling monetary policy, money supply and interest rate. This is the function of central bank, and that's why it is the correct option A. Moving on. What is a function of a commercial bank? It provides overdraft. That's a loan arrangement to the customers. Yes. Determining the monetary policy. This is not the job of a commercial bank. Monetary policy is determined by the central bank. Deciding what is the legal currency, legal tender. This is determined by the central bank. Acting as the lender of the last resort. If a banking institution is in trouble, the central bank will help that particular bank to come out of trouble. So A is the job and function of a central bank, B central bank, C central bank. Providing overdraft, providing loans is the function of a commercial bank. So that's why D is the right answer. Next, which activity is correctly linked to organization that provides it? Moving in the reverse order, stock exchange make loans to public companies. It is incorrect. Stock exchange only facilitate buyings and sellings of shares. We'll discuss in detail in our later studies. Commercial bank safeguarding the country's foreign reserve. No. Foreign reserves are safeguarded by the central bank. So it is incompatible, both these columns. Then commercial bank manage the government financial accounts. No. It is managed by the central bank. A. Central bank regulate the rate of inflation. Correct. A is the right answer. So that makes A going green. Next. The ways of making and receiving payments continue to develop. We have many receiving and payment systems. Currently PayPal, we have got Stripe, we've got Payoneer, etc. So as well as cash. So the ways of making and receiving payments continue to develop, as well as cash, debit cards and credit cards, mobile phones are now being used to make payments. Which method of paying for products provides no information to sellers about their customers? When you use mobile phones to make a payment, you have your information that is sent to the seller or producer. Credit card has your name engraved on it. Credit cards bear your name. Debit card bear your name. But when you pay cash for some commodity or some service, there is no information about the customer. So which method of paying for products provide no information to the sellers about their customers? Cash. Cash doesn't have your name written on it. So that's why A goes green. It's the correct answer. Next. Which is a major function of a commercial bank? Acting as the lender of last resort. Lender of last resort means if a banking institution is in trouble, that bank will rush to the central bank for help. Central bank will provide sufficient funds to keep the bank afloat. So central bank is the lender of the last resort. Incorrect. We're looking for a function of commercial bank. Collecting direct and indirect taxes. This is the job of the central bank. Taxes are paid in the central bank primarily. Issuing banknotes and coins. This is the function of central bank. Lending money to its customers. This is the function of a commercial bank. So that makes D to be the correct option. Next question. When will a central bank act as a lender of last resort to a commercial bank? When a commercial bank is in trouble, central bank will bail out. Central bank will help. In reverse order, when a commercial bank reduces its lending rates. If it's reducing its lending rate, why does it need help from central bank? Do we see the commercial bank in trouble? No. Indeed, the commercial bank is not in trouble. When commercial bank needs to raise share capital, the commercial bank can issue its stock in the stock markets. So this is simple issuing shares to the general public. It has nothing to do with the central bank. It's the raising of finance for the bank through the stock market. This is not a trouble for the commercial bank. When a commercial bank fails to make a profit, yet banking companies may run into losses. This is something natural. It can happen. Central bank cannot help you when your bank is running in losses. Yes, the central bank will help you when you are facing liquidity crisis. When you have short funds and you are not able to honor the customer's check, customers come, account holders come for demanding their deposits, their money with you, but you do not have sufficient liquidity. In this case, the central bank will provide liquid funds to keep the bank afloat, to keep it working. So when a commercial bank faces liquidity crisis, central bank will come for help. So that makes A to be the correct option. And remember, this is called the lender of last resort. When a commercial bank faces a liquidity problem, central bank will assist. One of the functions of money is to act as a measure of value. What does this mean? Money allows people to borrow and lend. Borrowing and lending is a function which you call the basis of credit. Money can perform a function of basis of credit. People can lend, people can borrow. This is not the measure of value. Money allows people to save their surplus income. This is called money as a store of value. You can store your savings. You can't store grain for long. You can't store wheat for long. But money can be saved for many years into the future. Money can be saved now for future consumption. So money is a store of value. You can store your savings for future consumption. So this is money as a store of value. We are looking for money as a measure of value. Money is used to buy goods and services. This is money as a means of exchange. D. Money is used to compare the worth of different goods and services. Compare iPhone versus a Chinese mobile. You will know which one is more expensive, which one is more valuable. Hence, this is called measure of value. So that makes D to be the correct option.